What's really happening in the NFT world, and what may come next? Over the past several months, cryptocurrency prices have fallen overall, but some sectors of the economy have been hurt worse than others. Particularly stablecoins appear to be quite unstable. And as the global crypto market continues to fall, the NFT market is stagnant. The price of all cryptocurrencies is currently falling in the red. So are NFT markets next? And what does the future hold for NFTs? Welcome back to Bitcoin Broadcast, one of the best channels for the latest trending cryptocurrency news. If you seek to be updated on what is currently happening in and out of the crypto world, this is the place to be. So how about you first give this video a thumbs up and you hit that subscribe button for more crypto-related news. And without further ado, let's get started. So, first things first, what is a non-fungible token? They're a type of cryptographic asset that can be found on a blockchain. These assets can be differentiated from one another thanks to the unique identifying codes and information that they possess. They run on different blockchains such as Ethereum or Solana, but the goal is one: storing data in the form of images into the blockchain. And now, during this harsh crypto winter, the embryonic NFT business has not been spared the wrath of the bear market. During the bear market in 2022, everyone in the industry has a harsh encounter with reality. It's a difficult experience. Significant price and volume reductions have been observed across the board at OpenSea, Magic Eden, and the JPEG store. But what is really happening? Well, before we can make any kind of prediction about how things are gonna go in the future, we need to look at what's happened in the past. The present market for NFTs is hauntingly comparable to the frenzy around initial coin offerings in 2017. Blockchain firms then had a cutting-edge alternative to acquiring capital from everyday people, thanks to the introduction of ICOs. Hordes of enthusiastic new investors were giving over their Bitcoin and Ether in return for tickets to the moon, flush with confidence and unrealized gains. Other than that, why would they not? At the height of the bull market in 2017, it seemed as though everybody and their uncle was getting wealthy very quickly. Simply making it into the whitelist of a successful initial coin offering was enough to completely transform your life. Basically, we were competing for positions at the very beginning of the blockchain revolution, which was on the verge of radically altering the world. Then fast forward to 2021, when investor greed was at its highest point. This is when we witnessed art based on NFTs fulfilling the same purpose as earlier ICOs in 2017. Basically providing gamblers with an easy method to invest in something they view as creative. NFTs became the new front line for high-risk speculating once they were introduced. An opportunity for investors who are willing to take the largest risk and those who have been swept up in a frenzy to once more reap the rewards of skyrocketing wealth. ICOs and NFTs were the most cutting-edge implementations of blockchain technology when each of their individual bull market cycles was at its peak. However, the prices for these NFTs are now declining. Are we in an NFT crash? Well, according to data that was released in the previous week, NFTs volumes has slowed significantly and has even decreased 92% over the same time last year. It might look like NFTs' popularity is on the decline, but is this really the end of the road for non-fungible tokens, or is it just the beginning of something new? According to the cryptocurrency statistics site Non-Fungible, there was a decrease of 47% in the number of transactions that took place in the first quarter of this year in comparison to the same time period last year. This was due to the downturn. The decline in price of Bitcoin has had an effect on sales of non-fungible tokens, which touched a low point not seen in the previous 12 months in June. Chainalysis, a business that does research on cryptocurrencies, said that sales of non-fungible tokens in June were slightly over $1 billion, which was their worst performance since the same month last year. The highest monthly sales ever recorded was $12.6 billion in January. Moreover, Ethan McMahon, an economist at Chainalysis, stated that the decline was unquestionably connected to the widespread bear market that has been occurring in the Bitcoin markets. Consolidation of markets is an unavoidable consequence of times like these, and in the case of NFTs, we're likely to see a reduction in the number of collections and NFT types that became well known. When it was at its peak, the non-fungible token market drew startling sums of money. For instance, $2.9 million was paid for a token representing Jack Dorsey, the co-founder of Twitter. Moreover, a digital collage by the visual artist Beeple that was put up for auction brought in $69 million. And now, according to data collected by Chainalysis, the sales of NFTs hit an all-time high in the month of January. However, an effort to sell on the Dorsey NFT was abandoned in the month of April after the highest bid reached $14,000. On the other hand, DappRadar, a business that does research on NFTs and blockchain-based video games, reports that demand for so-called blue-chip NFT collections has remained stable. Pedro Herrera, the head of research at DappRadar, states that the price of the least costly NFT at the Bored Ape Yacht Club has reduced by just 1% in the previous month, to $90,000. According to what he has to say, blue chip collections are performing considerably better than the overwhelming mass of NFTs. NFT sales hit $40 billion last year, and Chainalysis estimates that the total for 2022 is already more than $42 billion. However, the entire amount of money made from sales in January and February accounted for more than half of the total for 2022. The volatility seen in major stock markets, together with the concerns over rising inflation and interest rates, has placed pressure on the cryptocurrency market and lowered demand for riskier assets such as tech stocks and digital assets. This has resulted in the price of cryptocurrencies falling. However, it's likely that the perception that NFTs are no longer important in today's world is overstated. For instance, the Solana blockchain saw a growth rate of 91% month over month, resulting in around $300 million in NFT trading activity. In contrast, the Moonbirds NFT project gained a trading volume equal to $500 million. But even so, there are several NFTs that are on the cusp of witnessing a bubble burst that will be analogous to the dot-com catastrophe that occurred in the late 1990s. NFTs are at the end of one curve and at the beginning of another as they make the transition from PFP, profile picture NFTs, to NFTs with use. It's possible that this next surge will be the one that eventually enables the technology to become recognized as an exciting topic. As the technology moves away from the volatile nature of cryptocurrencies, more people who are used to working with fiat currency should be able to take part in the new era of NFTs. They ought to be more useful, with both practical applications and aesthetic value, and there ought to be a shift away from Ethereum in favor of other blockchains that are more secure, economically sound, and environmentally friendly such as Solana, Wax, and Flow. In addition, there ought to be more practical applications for NFTs. And that's a wrap. Do you think NFTs will also collapse like the cryptos? And do you think they'll ever have practical uses? Comment below. Let's interact. Also, please leave a like and subscribe. Don't forget to turn on the notification bell for more amazing cryptocurrency news.